Well, thank you very much. Thank you for inviting me to this forum. It's a real pleasure to offer you some of my remarks, of my experience from a country that is very much different from Greece, but still sharing some common features. The topic is also very broad, and one is tempted to pose general questions about the future of European banking sector, stemming from the turbulent and abrupt political changes that we are experiencing both in Europe and around Europe. Well, questions like this may be, for example, what will be the consequences of at least loosening of Dodd-Frank in the US? Will there be a pressure to reduce capital requirements for biggest banks, as we can expect in the case of the US? Will it exert pressure on European banks? In my opinion, it would be very bad, very improper for the European banks to follow the path of eventual path of American banks of two main reasons. Number one, European banks are much bigger than American banks, of course, compared to the size of the economy. And second, we don't have pan-European banks, which, contrary to the US, they have pan-American banks as opposed to state banks, which serve as some kind of cushion in time of local crises. This is not the case in Europe. As a matter of fact, we have national banks with international operations. So to reduce capital requirements in their case would be very, very dangerous. The next question: what will happen with the idea of capital markets union after Brexit? After all, UK was the main force, the main driving force behind the capital markets union. Will it become part of the grand deal with, if there is a grand deal with the UK? This would be very bad for the future of the European financial system if we marginalize or simply drop the idea of capital markets union. Or the other question, more general: if the European integration project weakens, well, we have to observe the upcoming elections in important European countries. Will the process of completion of banking union be continued with the same enthusiasm, muted enthusiasm, that we have observed so far, or will it be somehow orphanized? Well, but this is not what I'm going to say. I'm one of the very few people here in the forum that come from Central and Eastern Europe. Dejan Soskic, of course, well, somewhat sharing our roots, but still representing more the southeastern part of Europe. So let me share with you some of the observations that we in the region, not only in Poland, have on banking union and on an issue that is specific to the region, which is the strong presence of foreign banks. Well, due to historical events, we were bound to rely on strong presence of foreign banks, of foreign banking groups, most of them coming from Western Europe, or Europe generally. And this is something that came about in the late 90s, at least in the case of Poland. It was not it was not a very smooth process. However, it provided, all in all, very positive results, I must say. Very positive results. I will elaborate a bit on the weaknesses of this process, but you just should imagine that we started from scratch. At the beginning of the 90s, most countries had just central bank, which was responsible for servicing businesses, or state businesses, state-owned companies. They usually had one savings bank and one bank that was servicing foreign trade operations. That's it. We had to build up commercial banking sector from scratch. And it started in a sort of explosive way, both helped by the state, but also with some non-trivial participation of private business. Well, those banks were told, now you go and you finance the economy. Private economy. Private economy. This was a big advice. After 2 years, we were on the verge of big banking crisis. All of them were in doldrums. They had no capital base. They had, most important, no wish, no will to be conservative and selective. In 2 years, as early as 1992, Poland was approaching a major banking crisis. We did a lot to recapitalize the banks. We changed their internal structure. And most important, we told the managements of the banks, we are going to privatize you, which was a very big incentive for all of them to change their behavior, to become conservative, to become responsible creditors. Well, a few years later, it turned out that most of the banking sectors in the region were in the hands of foreign banks. Czech Republic, almost 100%. Baltic states, almost 100%, with the very important exception of Latvia, where one big domestic bank was preserved. Poland reached probably the lowest share of foreign capital in the banking sector, which was about 70%. 70%, still the lowest. Well, how did we do in the following years? Well, the banks turned out to be very well capitalized, very conservative, very well managed. In many cases, those subsidiaries in the region were much better than their parent banks in headquarters. I will spare some of the more dramatic results, but I can tell you of one example. Unicredito, which was probably the only bank with the ambition of creating a pan-European, at least in the eastern part of Europe, pan-European network of banking. Well, at one point, the Polish subsidiary, 5% of the whole balance sheet, produced like 50% of profits of the whole group. Come on. It must have ended in a crash, and it did later on. So we have built up a system that was based on foreign ownership, but it produced a very reasonably managed banking sector. How did the banks behave in the crisis? Very differently. One positive example is the Baltic states. The Baltic states were completely dominated by Swedish banks. Swedish banks themselves, very well run, very well capitalized, taking much of the brunt of the crisis that erupted in those countries. As a matter of fact, it was partially due to the behavior of Swedish and Dutch or Scandinavian banks in these countries that the three Baltic states sort of rebounded pretty well in the years after the immediate crisis. So this is a good example of foreign strong banks serving as a cushion. As a matter of fact, Baltic states became parts of the banking union before the banking union was ever thought of. What about Poland? Well, in the years 2009 and 10, as in most other countries in the region, the foreign banks were sure that the crisis will hit badly the region, so they reduced their exposure. One of the big dangers that we felt was that those banks will drop business and run. You remember the Vienna Initiative, which provided a forum of consultation so that the banks were released from the prisoner's dilemma, and they didn't, and they stopped thinking about deserting their businesses in the region. But even in the case of Poland, which was the country that didn't fall into a recession, foreign banks reduced credit activity. Fortunately, we have the 30% of Polish banks. They took over. As a matter of fact, they flourished on this. Foreign banks returned after 2 years, and they again became the driving force of the economy. But in the era of nationalism and some kind of protectionism, we still feel that the overly exposure to foreign banks may be dangerous. As a matter of fact, only when those banks are weak and come from countries with problems. Well, so this is how we have built up our banking sectors, and how it and the experiences from the last let's say 10, 15 years shaped out to a certain extent our approach to the banking union. Many have joined automatically, Euro member states. Some are contemplating, but those that are outside of Euro are pondering. Why? I think that the main weakness, and this is the last sentence, the main weakness of the banking union in Europe is that no matter what you do, the big European banks are national, are not pan-European. And as long as they are national, the banking union is, to a certain extent, from our point of view, a window dressing. Thank you very much.